Uber's the same company today that it was a couple months ago, but public market investors could get a pretty good discount in this market, given how bad the markets have looked this week. It's not a great setup for existing investors for an IPO, right?
Yeah, I mean, that's a good, fortunate bit of timing for the public markets. But, you know, in general, I feel like the worry with the company is that a lot of the growth has gone out. And so, you know, I don't know if public market investors are going to get a huge deal from this in the long run either. There's a lot of problems with this company. We're seeing it in their relations with drivers. There's kind of more and more worries about their effect on traffic in major cities. And there's this long-term problem of, you know, what's going to happen as cars get more automated. I don't know. I think there's just a lot of clouds over Uber and Lyft and this just sector in general. Even though it's just been such a huge and life-changing part of you know, society for many people over the last decade or so, I still think there's sort of big question marks over the company and their future.
Despite that, Deirdre, Uber is in many ways in better shape than it's been in a long time in terms of management stability, board stability, at least the feel of the direction of morale inside the company. How does this setup look for you?
You know, I think they put a lot of the right pieces in place. You had Dara Khosrowshahi come in and clean up after Travis Kalanick. You saw in their S1 how they talked about brand and doing right by the drivers and customers. But what it comes down to, especially when you see the market selling off like this, what is the appetite for a company that is losing so much money? And Farhad mentioned this, but we see what has happened to Lyft with a lot of the same economics, but more focused, less diversified than Uber, certainly not as global. And the markets haven't responded very well. They had earnings earlier this week, and they actually looked pretty good. But what public markets can't seem to sort of accept so far are these enormous losses and the fact that their best growth days may still be behind them, may yet be behind them, because they're going to the public markets so late. Uber is a decade old.
I mean, just talking about the setup and gaming this whole thing out, I feel like it's been an exercise in curbing your enthusiasm between the Lyft sell-off, the market trade turbulence, the giant losses that everyone's scrutinizing. Couldn't it set it up for a nice pop?
It absolutely could, but I don't know that it bodes very well for the ride-sharing industry at large, because the most anticipated IPOs of the last few years have priced above that expected range. Uber now, a source tells us that it's going to be pricing at the midpoint at $47, giving it a market cap of $86 billion. Yes, that's still above that last private market round, but it's certainly not as high as anticipated. It could set up for a pop, but given all the questions about the ride-sharing industry, and I don't think we're any closer to knowing about that path to profitability than we were a few months ago.
Farhad, I want to get to that moral stain that you talked about, because there are a lot of companies in Silicon Valley today going through criticism. Facebook, one of the chief among them. Do you think it's just Uber's business model and its impact alone that's the moral stain? I mean, for example, we talk a lot about the $10 an hour that the drivers perhaps end up making after it's all said and done. One of my last Uber drivers in Las Vegas was a Delta Human Resources employee making extra money. So maybe that's okay.
I mean, maybe that's okay. I don't know the hundreds or perhaps thousands of Uber drivers around the world who are protesting this may not think so. And, you know, what they're pushing for is a livable wage and some worker protections. I think it's a moral stain in the long run that we have this system where, you know, this sector gets to evade minimum wage laws. And I feel like in the long run, that's probably going to change. It doesn't seem tenable to me that you're going to have this company with this huge workforce and kind of get this kind of special treatment over how they treat their workers. It seems like in the long run this is going to change in some way, perhaps not classified as employees, but there may be some middle ground, you know, like regulation in the way New York has over ride sharing. A lot of cities may consider that for you know, worker reasons and traffic reasons. And so I think that kind of the idea that we can tolerate this in the long run is just false.
It's a good point. The worker strikes, we've been seeing the Bernie Sanders tweets, Deirdre. Obviously, the fact that they're contractors is core to the business model. Where do you put that? Where do you stack that up on the list of risks if that model changes?
It is a huge risk. I can't say this enough because drivers are one of the costs right now that Uber and Lyft can control. And even though it's a relatively small group of people who are out there striking and protesting, there's still about 60,000 drivers who are pushing or have pushed for regulations to change. And that could affect the bottom line and that path to profitability that public market investors seem so concerned with.